How's it going, traders? Welcome back to another video on my channel. My name is Neal and I'm going to teach you how you can make $1,000 a day trading penny stocks. It's not easy. It takes a little bit of front capital and also takes a lot of patience and get a better understanding of the charts and the patterns over time. But this short selling penny stock strategy has been known to make huge percent gains, and which leads to $1,000 trading days and exponential growth as you get better and better, making more wins and higher percent gains. It doesn't happen every time, but with volatility in the market and big penny stock moves, you can really make a substantial return. And I think anyone can learn this lesson, as we'll get into the chart of SAVA to demonstrate how you can trade a chart and a ticker that will make you a lot of money. So let's get into it.
Chart for SAVA, which had a gap up in the pre-market, and this was to fill the gap down here. So when you say a gap down, that means when the chart starts here and then the next morning it opens below. So it creates this wide void in the chart, and that's what happened exactly with SAVA. But today it had positive news, which had it gap up. As you can see, there's a gap below where it opened. So this chart has a huge gap, but that doesn't mean it's going to fill over tonight or in one day, but it does mean in time it should fill. Like this one has been officially filled. So what it did in the pre-market is it had a gap up from its previous closing price around $4, $4.50, and it rose all the way to 6 to 7, 7 to 8, 8 to 9. So the way you can make money on this stock is noticing the pre-market gap up, having some volume in the pre-market session, and you got to realize it's a game of channels. So what's the channel? Here it was from 6 to 7. So when I say channel, it's where buyers are right here and where sellers are right here. And that causes you to think, okay, if it goes above where the sellers are, it's going to keep going up. And notice how it did from here. It rose, and eventually it's overextended. I mean, going from $4.50 to $9, that's a pretty substantial move just in the pre-market alone, which caused this huge selling pressure. So the way you make money on this ticker is you have an entry price, 8.8, which is about near the highs, but you definitely had 5 minutes to get in. 1, 2, 3, 4, 5 candlesticks, and that's where you get in. So the key is risk management. So on a $10,000 account, you can take a $3,000 500 position size and only risk 50 cents to the upside. Notice how 930 as your stop loss didn't get hit, so you're good, and you're in at 8.8, and now you have a price target of about $6, which makes it a 5.6 risk to return ratio. So you want that $1,120 gain when you're only risking $200 on this position size, which is great. $400, you're shorting the stock. Let's see if it can get to 6. And remember how we said earlier the price channel was here. This is where the buyers were and this is where the sellers were. Well, guess what? When there's no more buyers up in here, the channel is huge, and this is great. That means there's a huge percent channel all the way down, 22%, and it gets shorted and it continues to go down to $6, and you take your profit. So this happens in about an hour and a half, and that's how you can make a substantial return in the stock market, trading penny stocks.